Assalamu alaikum. Welcome to lecture 11 of taxation. Today's topic is partnership. Before this, I have covered sole trader, basis for assessment. So some portion of it will be similar to partnership also. This is a very small lecture. So let's start from basis of assessment. This was also the topic of my previous lecture. That was lecture 10. But that was applicable for sole trader. Here we are going to specifically focus on partnership. So that's why if you have started watching this video, make sure that you watch my previous lecture, that is lecture 10, sole trader basis of assessment, and you will get all the lecture on taxation on my taxation lecture playlist. Next, allocation of profit and losses, how profit and losses are allocated between partner, how when the profit sharing ratio changes, how to account for it, commencement and cessation of partnership, and limited liability partnership. Then we are going to do some questions and summary. So for partnership, the overview is basis of assessment, changes in profit sharing arrangement, change in partnership, and LLP. Let's start with basis of assessment. Each partner is taxed individually. Okay, even though the partnership is a single trading entity. But when you're taxing, they will be taxed individually, just like how sole traders are taxed. Then each partner is taxed based on how the profits are shared among them. Okay. To determine the partner's taxable profit, firstly, you have to calculate the trading profit per partnership account. Okay. This is adjusted for tax purpose as for a sole trader. How? See, from the trading profit, you deduct capital allowance for sole trader. Capital allowance is my lecture 9. Same way, even for partnership, each partner might be eligible for capital allowance. So you deduct that capital allowance from trading profit. Then, secondly, you adjust the tax adjusted trading profit, okay, are allocated to the individual. Then you allocate this tax adjusted trading profit among the partners. First, you will only get one trading profit. It's not per partner you are getting different profits. No, one profit, deduct capital allowance, then allocate that profit among the partnership based on their sharing ratio. Finally, you need to assess this. The basis assessment rule will apply. Okay, it will apply to determine each partner's taxable profit in a tax year. Make sure you watch my previous lecture. Otherwise, you will not understand the basis of assessment. You need to know what is basis of assessment. And I'm not going to cover this in this lecture. It was covered very intensively in my previous lecture. Okay, now then next, compute. How do you compute partnership profit or losses? This is same. Okay, the principle for calculating tax adjusted trading profit for partnership is same that you do for sole trader. Okay, here for partners you might be having salary, partner salary, and interest on capital. This is specifically applicable for partnership. It was not there for sole trader. Partner salary and interest on capital, they are not deductible expense in the adjustment of profits computation. Why? See, partner salary and interest on capital, they are just an allocation of profit. You might allocate a profit. For example, you get a profit. You might give out of that profit, you might give salary to partners or charge interest on the capital. They are not expenses. You don't deduct them as an expense. Third, note the cash basis option and the flat rate expense, they are available to partnership in the same way as sole trader. However, these topics will not be asked for partnership. It will only be asked for sole trader. Cash basis option and flat rate expense. Then allocation of profit or loss. This is divided based on the profit sharing ratio among the partner for that period of account. Partners are entitled either to salary or interest on capital or both. Okay, salary means it's a fixed allocation of profit. They might say 5% of profit is salary or 10%, whatever. And interest on capital. They will give you the capital, they will give you the interest charge, just calculate interest on capital. Then the balance of profit after you pay off your salary or interest is then allocated in the profit sharing ratio PSR. First, you allocated a fixed salary and interest. After that, only you allocate in the profit sharing ratio. We'll do questions on this. Then, whether it is described as a salary, interest on capital, or a profit share. Remember, the total allocated to a partner is accessible to income tax as trading profit. That means the total of salary, interest on capital, profit share. You add all these three, then you allocate this as your trading profit to your income tax. Income tax will be charged on your trading profit. The addition of salary, interest on capital, and profit share. That's how it works. Now let's do questions. We have two questions to attempt, illustration 1 and test understanding 1. Illustration 1, you have capital balances, opening capital balances for both Bill and Dan, 75,000 and 60,000. Interest and capital is 5%. Then 25,000 each should take a salary. And profit is split on 60-40 basis. So profit is 74,000. Now you need to calculate the trading income accessible for each partner for the tax year. So let's do that. You need 4 columns, one for description, one for pill, one for Dan, and one for total. Let's quickly do that. So here, pill, Dan, total. First, salary. Okay, because they told they should first take a salary, then they put a comma. Always follow the sequence in which the information is presented. First it was salary, then it is interest on capital, okay, and then the profit sharing ratio. So salary is 25,000 each, total 50,000. Then we have interest on capital. Interest on capital at the start of the accounting period, 5% on this and 5% on 60,000. So 5% on 75,000 and 60,000. Okay, on 75 for bill, that is 3,750. Then we have 3,000. Together it makes 750. 6,750. Okay, now the total 56. Sorry, 28. 750, 28,000, 56, 750. Remember, they have given you the profit. What profit? 74,000. This is the total profit. Okay, the total profit they have given you 74,000. You need to allocate this among the partner. Total allocation of profit, partnership profit. How will you allocate? See, this will be the balancing figure. Okay, this will be the balance. How will you get this balance? Deduct 74,000 from this amount. I think 750. Okay, which will be 17,250, isn't it? So it's 17,250 here. So this 17,250 divide in the ratio of 60-40. 60 for pill, 40 for debt. So if you divide it by 60, I'm sure you know how to divide by 60, 40. If you don't know, it's like this: 17,250 divided by 100 into 60%. 17,250 divided by 100 into 40%. You will get the amount. 60 for pill, it will be 10, 3, 50, and for him it is 6,900. Together, if you add, you will get 17,250. Then here it is 39,100. Add this and this, 34,900. Together you add, you will get 74,000. Okay. Since the ratio for pill is more, it is 60. You will always get the profit for pill more than them. Now their allocated profit will be assessed to tax. So for pill, he will be assessed on this amount. This is for pill, 39,100, and for Dan it is 34,900. This will be assessed in 2022-23 tax year. Okay, they also told you it will be assessed. Why? Because the September end is 30th September 2022. This falls in the tax year 2022-23. Because 23 ending is 5th of April 2023. This year end falls in this tax year. Basis of assessment you should know. Okay, it's a current year basis. All this you will not understand if you have not followed my previous lecture. That's why I'm telling you, please watch my lecture 10 first and then come to lecture 11. Now, next question. Test your understanding 1. Here also we have two, Paul and Art. We have salary, we have interest on capital, then by using balance we have to find. So we'll quickly do this like how we have done here. We'll just change some of the name and the amount, of course. It will be the same way of finding. Rest all remains the same. What is the name for here? We have Paul and Art. So same pattern, Paul, Art, total. Can you understand a pattern? Then they have a salary 3,000 with a 15% interest on capital. His capital balance was 27,000. Then Paul and Art agreed to split any remaining profits equally. Profit is 30,000. Same tax year. Okay. This is for 31st December 2022. Okay. So salary is 3,000 each. 3,000, 3,000. Sorry, wait. Sometimes a partner might not get a salary. Okay. Paul with a salary of 3,000. Paul, not for Art. And Art is entitled to 15% interest. For Art, it's 15% interest. So no salary, only 3,000 for Paul. 15% on, this is 15% on 27,000. They have given you the capital. But it's only for Art. It is 4050. So the total is 4050. We don't have anything here. We don't have anything here. Then here we have 7050. Okay, next. What's next? They told divide the balance 50-50, right? So here profit they have given you 30,000, right? So from 30, if you take 750 out, you will be left with the balance is 22,950. This 22,950 needs to be divided equally. 11,475, 11,475. Okay. So here it is 14,475 because add this with 3,000 and this if you add with this it will be 15,525. Add and see you will get 30,000. So it is this profit and this profit which will be assessed for tax. Okay. Next, we are heading over to partnership capital allowances. Capital allowances we have done in my lecture 9. That was a 4 hour 30 minutes lecture. You will get it under my taxation lecture playlist. You will get the link to this playlist at the end of my video, or you can click the I button above and directly go to my playlist and get the lecture. Now, same way, capital allowances, how we do for sole trader is same for partnership. So you will deduct this capital allowance in calculating tax adjusted trading profit or loss for partnership. Then you allocate the profit between the partner. So the profit allocated between the partner is therefore after deducting capital allowances, not before. First you deduct capital allowance, then you allocate the profit. Individual partners cannot claim capital allowances on their own behalf. Okay. If assets are owned privately, let's say cars, then the total cost of such assets are included in the partnership's capital allowance. Maximum capital allowance available will be calculated in the normal way, how we calculate capital allowance. Then, amount actually claimed is the business use proportion. See, if you are using a car privately, let's say one of the partner or two of the partner, only the business use proportion only you can claim for capital allowance. Then you deduct the capital allowance before you allocate the profit to each partner. Then, profit sharing ratio sometimes could change due to a number of reasons. First reason, existing partner may decide to allocate profit in a different way. Maybe duties might have changed, maybe based on seniority, or maybe simply by the agreement of the parties concerned. Or membership of the partnership changes. Maybe some of a new partner comes, or old partner retires or dies. Then even if there is at least one partner which is common to the business before and after the change, the partnership will automatically continue for tax purpose. You can't say partnership is no longer there. One partner should be common before changing. Either you change the contract, profit sharing ratio, the percentage, or you some partners leave and new partners come, but at least one partner has to be there common, both before and after this change. Then this partnership will continue. Otherwise, partnership will not continue. Sometimes it's possible that partnership might become a sole trader, or sole trader might become a partnership, or partnership might become a company. Quite possible. Your status might change. Then if your status changes, you have to account in the tax accordingly. If from partnership you become a company, then you will be charged corporation tax, not income tax. Now, where there's a change in membership, maybe someone have commenced or someone have ceased, then the commencement or the cessation basis of assessment will apply to the individual partner. Only for those partner who is joining or either leaving the partnership, not the remaining partner. If the partner is not leaving also, not joining also, for that partner, nothing is going to change. But a new partner joins or a partner leaves the partnership. For that partner, for the one who is joining, commencement basis of rule will apply. For the one who is leaving, cessation basis of assessment rule will apply. To know this commencement or cessation basis of assessment, you have to follow my previous lecture, lecture 10. That is sole trader basis of assessment. Next, what is the effect of change in the profit sharing ratio? The effect is, if the partnership changes its basis of profit sharing during a period of account, then the period is split. Then you might be allocating the profit in the different parts. Some of the profit might go in this period of account, some of the profit might be going in the different period of account. It's quite possible. Now let's do question. Illustration 2 and test your understanding 2. Now, Rosalie and Logan are the two partners. Tax adjusted is 16,500. Then up to 30th June 2022, profits were shared 3:2 after paying annual salary of 3,000 and 2,000. From 1st of July, profit sharing is 2:1. after paying annual salary of 6,000 and 4,000. Now days will change. Okay, so let's start. In the similar way, you have to do test understanding 2 as well. So let's quickly do that here. Two columns we are going to have. One is Rosalie R, one is Logan, and the other one is the total. So first it is, see, the year end is September. So it will start from 1st October 21 to 30th June, because 30th till 30th June there is no change. You will go according to the old profit sharing ratio. How many months? 9 months. First it is salary. Then comes the balance. Salary is how much? You have to take for 9 months. You need to go to the total. Okay. What was the profit? 16,500. Even 16,500 you can't take here properly. Okay. Wait. Salary you can take. What was the salary? 3,000 and 2,000. This 3,000 and 2,000 also you can't write fully, because it is only for 9 months. So you have to take 3,000 for 9 months. And then you have to take 2,000 for 9 months. Like that. So if you take like that, salary for him, Rosalie, is 2,250. It's 1,500. Total is 3,750. Because only 9 months salary you are taking. And here the profit is given. To find the balance, you need profit. Profit is how much? 16,500. But only for 9 months you are taking, which is 12,375. This is the total, right? So here the balance you will easily get, it is 8,625. Out of this 8,625, profit sharing ratio before was 3:2. So this 8,625, when you are taking, it will be like this. 8,625 divided by 5. See, because 3:2. Take the total. It's 5 into 3. 8,625 divided by 5 into 2. That's how you have to take. So you will get here 5,175, 3,450, right? 865. Next, from 1st July, there was a change till 30th September. How many months? 3 months. Again, salary, only for 3 months you have to take. Balance and profits. So salary was how much? 6,000 and 4,000. Remember, this you have to take for 3 months only. Okay. So 6,000 if you take, and then 4,000. So here, for him, salary will be 1,500 and 1,000. Together it is 2,500. Then profit. Total profit is 16,500. But take for 3 months only. So 3 months profit will be 4,125. This will be 1,625. Out of this you have to take ratio of 2:1. So divide 1,625 by 3, because the addition 2 and 1. Total is 3 into 2. Then 1,625 divided by 3 into 1. Like that's how you find the ratios. So this one will be 1,083,542. Hence you will get 1,625. If you add all the profit, 16,500, sorry, 16,500 is here. Just add 4125 with 12375. Then for Rosalie, add all this. 2255, 175, 1005, 108. Total you will get 10,008. Here 6492. If you add this two also, you will get 16,500. So the total profit that will be assessed is this and this. Now let us go to test understanding 2. I'm not going to do, since it's similar, just change the number and you can do it on your own. But here I will just read it for you. Go to the table and change the figure on your own. We have this time partner is changed, still two partner. Salary is 4,500, 3,000. This is annually. Okay, you have to take for months. 3:2. Then from 1st July, he's receiving a salary of 9,000. He's receiving 6,000. Ratio is 2:1. Tax adjustment is 24,800. Everything is same. But the time, here it is 31st December. So from 1st of Jan 22 to 30th of June 22. 6 months. This time it is 6 months, 6 months. 6 months old profit sharing, 6 months new profit sharing. That is the only difference. Please try it on your own. Changes in membership. So here, normal opening year and closing year basis applies for those partner who joins or leaves. Okay. So a change in membership will only affect those who's leaving and joining. The continuing partners will be assessed on current year basis. Now, for new partner, there are some steps. Identify the start date of new partner. Then allocate between old and new partner. If the new start date is partway through the period of account, like how we have just seen in the previous question. Okay. They have just changed the profit sharing ratio. New partner did not come. Okay. Let's say that new partner comes in the middle of the period of account. Then you allocate the profit between two periods. If new partner joins at the start of a new period of account, then profits in the period are allocated throughout using the new profit sharing ratio, that is PSR. Then you need to determine the assessable trading profit for the tax year. For those partners that are common to both old and new partnership, no change in calculating their assessable trading income. And therefore normal current year basis, that is CYB approach, applies. The partner joining, remember the partner joining only must apply opening year rule like sole trader. A partner is treated as commencing when he or she joins the partnership. Each partner will have their own overlap profit. What is this overlap profit? Please go back in my previous lecture and check. I've covered it. Each partner will have their own overlap profit and they will be therefore available for overlap relief, just how sole traders get the overlap relief. Let's do questions on new partner joining the partnership. Illustration 3 and test your understanding 3. These are the two questions we are going to do. So here we have three partners, Alex, Asen and Joss, before a new partner joins in between the year with salaries given, capital balance and interest on capital. Okay, we have been given the 2-year and profits. Now, on 1st of Jan 2022, Rafa was admitted to the partnership. Profit are shared equally before the admission of Rafa. Okay, after giving salary and interest on capital. Then after Rafa joins, we have 4 partners, each have salary, capital balance is given for the 3 partners, but Rafa does not have any capital balance, therefore no interest on capital. But profit sharing ratio changed. Okay, 35, 30, 25 and 10. Then profit is given, adjusted profit is given for the tax year 30th September 2023. What you need to do is, you need to calculate the assessable trading profit for each partner for the tax year 2021-22 to 2023-24. Okay. Next, test your understanding 3. If you see, you have two partners, and on 1st of July, Carol joined, profits are shared equally, and tax adjusted trading profit is given. You need to assess individual partners for the tax year. Show the amounts assessed on the individual partners for the tax year. Very similar question. So let us do this. And I'm going to use Excel for it since we have lengthy questions to do here. So here we are going to have 4 columns. So first, step 1. What is the step 1? Allocate the salary, interest on capital and PSR among the partner. So let's quickly do that. This column I'll keep for this column I'll give for description. This is total. Then this one is Alex. This one is Arseni. This one is Jos. For Rafa, we don't have anything yet. Rafa did not join. This is for year end 30th September 2021. When did he join? So they asked, okay, for the tax year. But before going to the tax year, before getting the assessable profit for tax year, we need to find the profit for each year. Just wait a minute. Okay. Now, so first for year end 30th September 2021, we have 103,500. This we need to allocate first. Okay. Then we have first is salary. Then we have interest on capital. Which is 5%. Then we have profit sharing ratio PSR. Total. What is the total? 103,500. Remember, salary is given here. You see here? So 15,000, 12,000, 10,000. Just perform the sum function so that it makes your life easier. Here, interest on capital. 100,000 and you need to find 5%. Right? So 100,000, 5%. Equal to 5% into 100,000. That equal to 5% into 80,000 and equal to 5% into 40,000. Then just drag down this to get the total of interest on capital. Then we have profit sharing ratio. This and you will get this minus the total of this. Enter. Just put the column. Okay. Wait a minute. So here it is this minus this minus this. Enter. Okay. So now they told this profit is shared equally. Right? So if you want this, just divide this by 3 and take it to this. Okay, no. Just copy paste this. Paste. No, it has a formula. You need to paste the value only. Okay, now just drag it to the other cell. Automatically it will take the function. It will, this you will get by deducting the total of this from here. Same for Arsene, same for Jaws. Okay, now okay, there's been a mistake. They told profit has to be equal, so it is this divided by 3. So just copy paste only the value, you see. Then the next, copy paste, this one will be for 2022. Okay, so for 2022 it is from 1st of October 2021. See, year end is this one, right? When did new partner changed? From 1st of Jan 2022. So because it is 1st of Jan 2022, it falls in this second year end. First year end, there will be no issue. So for this, it will be from 1st of October 2021 till 31st December 2021. Okay. Why 31st December 2021? Because for this 3 months, for this year end, there were 3 partners. He joined on 1st of Jan 2022. That's why. So for 3 months, only you can take for the 3 partners. After that, you have to take Rafa as well. That is from 1st of October 2021 to 31st December 2021. So this time, just copy paste. Salary will be for 3 months. Because from October to December, October, November, December. And interest will be 5% but 3 months. Okay. So what is the salary here for Alex? 15,000. So for here, equal to 15,000 into 3 divided by 12 for 3 months. Into, okay. 15,000 into 3 divided by 12. So if you take it to the other cell, it's done. And here I can use the sum function. Same way, interest on salary. It will take. If you do here, automatically this will go down and take it from here. This you can copy paste. Even this you can drag down. You see? You will only take 3 months of the interest on capital that you have calculated previously. Then total, this thing is 32,000, I guess. Yes, now profit will be this into 3 months. Sorry, it is not this total. You have to take 128,000 because for year end 30th September 2022, it's this 128,000 into 3 divided by 12. 32,000. This minus this minus this. And this will be divided equally. Just drop down the decimal. No. Just have to copy paste. Remember to in one you have to take 6, because if you add this 3 it has to be 20,000. So in any one of the 3 you can take 1 to 4 6, because if you take 6 6 7 for all the 3 it will add up to 20,001. We need exact 20,000. Sometimes you might be here and there little differences might occur due to rounding. It's not going to have a major impact, don't worry. Now after Rafa joins, which will be from 1st of Jan 2022 till 30th September, because year end is 30th September 2022. 9 months, right? The remaining 9 months. Just copy paste here. Now you will take for the remaining 9 months only. So just go here, put equal sign, just go here into 9, just take 9 months. Drag it here. Oh no, you can't take like that, because new partner joins, you again have to take out of wait a minute. No, after new partner joins, it's this. The salaries are this. It has changed. Okay. So now because this is changed, you only have to take 9 months out of this, 20, 18, 15 and 10. So for 20,000, I will take only 9 months salary. And I will add one more partner here, which is Rafa. But Rafa will not have any entry up till until here, 1st of Jan 2022, because this is the date when he joins. Salaries you have to take from here, 20, 18, 15 and 10. 20,000 into 9 months. You need to enter the equal sign. Otherwise the functions will not perform. Then it is 15,000 into 9 months and wait, this is the total. $15,000, 13,500. This is the total column. I forgot. Sorry, 11 to 50. Then here it's 10,000. You have to take 9 months. Now take the sum function. 47,250 is the salary. Okay. Interest on capital 5%, but only for 9 months you have to take. So 100,000 into 9 months into 5%. 3,750. Accordingly, you have to take 5% on this amount. Sorry, here 5% on this amounts, and just take 9 months out of that balance after finding 5%. I will just enter the amount now. 3,000. Please check whether you are getting 3,000, 1,500 this amounts, and here 0. Just drag down here. Total should be 8,250. Profit sharing ratio this time it is not equal. It is 35, 30, 25, 10%. 10. Total profit is given. What is it? See, you have been given 128,000, right? Here 128,000. This you have to take for 9 months. 96,000. So here 40,500. So this 40,500, 0.35 into 40. 14,175. So like that, if you take, then you take 30% of 4,500, you will get this amount, 12,150. 10,125. 4,050. Add and see, are you getting 4,500 or not? Then, what's next? Year end, 30th September 2023. Okay. Here also you will have salary, no need to take 9 months. For 30th September 20, to the year end 30th September 2023, you will have full salary, interest on capital, and PSR. What would be the salary? 20, 18, 15, 10. We'll take it. Just do the sum function. Their interest on capital 5%. So if you take 5% on 100, 5% on 80, 5% on 40, this will be the amount. 5,000, 4,000, 2,000, and 0. 11,000. And here they have already given you profit, I think. See, they have given you 140,000 for 30th September 2023. So this 140,000 will be the total. This minus this minus 66,000. Then on this 66,000 you will take 35%, 30%, 25%, 10%, and you will get this amount. 23,100, 19,800, 16,500, and 6,600. Okay. Now, step 2. You have to use current year basis. For whom? Alex, Arsene, and Joyce. Because they are same. Only for Rafa, you have to do opening year basis. So let's do. Tax year, basis period, tax. Alex, Arsene, Joyce. Tax year will be what? The 3 tax year. 2021-22, 2022-23, 2023-24. Basis period will be year ended 30th September 21. This will fall in the 2021-22 tax year. See, 22-23. Then for Alex, what will be the profit? It's very easy. You need to go up and check. Okay. It is this. Okay, this has been wrong. There has been a mistake here actually. It is the sum function. So it is 38,500. This would be the profit. And 34,500 for Sine and just 30,500. Just check for year end. So 38,500, 34,500, 30,500. And for him, year end 22. For year end 22, what do you have to do? For year end 22, there has been a change. There has been a 2 period of account. One is up to for 3 months. One is the last 9 months. So you have to add the total. Okay, so when you're doing this also, you have to do the sum function. You have to add this, comma, this, enter. Wait, there has been some mistake. No, it's comma. No, it's not that. It is the sum function. You have to add all. It is this. You have to take. $44,592, $39,317, $32,541. Then year end at this. Sum function. $48,100, $41,800, $33,500. You have to take these totals basically. Okay. And for 2022 only, you have to add this and this. Okay. But for 2021 and 2023, the basis period, this and this is very simple and small also. Now, for Rafa, tax year, basis period, and profit, assessable profit. '21, '22, '22, '23, 24. Basis period. Remember, for him, basis period will be 1 from the day he commenced. 1st of Jan to 1st of Jan 22 to 5th April, the following tax year end. That is 5th April 2022. How many? Out of 9 months. See, he was there only for the 9 months. The last 9 months in 2022. 1st of Jan to September. So during that 9 months, only 3 months will be assessed to tax. That is Jan, Feb and March. So we'll go to Rafa and get it done. What is his profit? Oh, there's been a mistake somewhere. Okay, it is this. 11,550. Because the remaining will fall in the next tax year. Okay. So here 11,550 into 3 months out of the 9, 3,850. Then the next tax year, because he does not have a year tax year and here, it will be the first 12 months from the date he start commencing. That is 1st of Jan 2022 to 31st December 2022. Okay. So out of this first 12 months, the 9 months is okay. You can take the 9 months profit and add the 3 months profit of the next period. You understand what I mean? You will add go to Rafa, see Rafa. Okay, here 16,600. Okay. So with this 16,600, you will add, sorry, with 1150. This 1150, this. You will take 3 months of this. Plus 16,600 into 3 months. 15,700. Then for this it will be year ended 30th September 2023. 16,600. What is the overlap profit? See, there's been an overlap profit. Why? This 16,600 has been charged here also, the 3 months. And also 1150. 11,550 has been taxed twice. Some of it is here, some of it is here. That is known as overlap profit. How much? 3,850. 3,850. And what's the next? 3 months of 16. So 16,600 into 3 months. Take the sum of this two. This is the overlap profit, 8,000. This will be carried forward. Okay. Remember, this question tests so much of your knowledge. basis period, tax year, assessable profit, overlap profit, allocation of profit when profit joins. So many. In your exam, one single question will not test all these issues. Okay, so don't worry. Now, test your understanding 3. So, test your understanding 3 is very easy. 10,000. You have 30th of June as your year end. So, profits are shared equally. So, 10,000, 13,500, 18,000. Profits will be shared equally. This profit will be shared 5,000, 5,000. Here it will be shared 6, 750, 6, 750. And for Carol, here he joins 1st of July. See, he joins in the starting, not in between. That's why there will be no issue. So this 18,000 will be divided between 3. 6,000, 6,000 and 6,000. Step 1 is over. Step 2. In case you are not understanding, let's do it here for you. Okay. 30th June 2021. 22, 23. Total able, Berti, Carol. Here the total is 10,000. Here the total is 13,500. Here the total is 18,000. So here 5,000, 5,000. 6, 750, 6, 750. 6,000, 6,000, 6,000. Now, next, tax year. This will start from 2020 and 21. 4 tax years are there. Then here the basis period will be, just change the September to June. And here it will be 1st July 20. Because when did Carol start? 1st of July 20. That was the date he started the partnership, right? 1st of July 20 to 5th April 20. 3 months. Sorry, 21. How many months? 9 months. So we have to take this for each individual partner. Okay. So whether since we have the similar profit, we don't have to do different for each. It will be same. Like if you see here, for able we have for able and Berti, we have 5,000, 5,000, 650, 650, 6,000, 6,000. Okay. So there'll be no issue. but this 5,000. Okay, the 5,000. Okay, so here 5,000 you can only take for 9 months. 3,750. This is for both able and Berti. It will be same. 3,750. Then here 3,750. Here's 5,000. Just take from here. Okay. You see year end 30th June 21. 30th 2. It will be 6,750. And then 6,000. What about the overlap profit? There's an overlap profit. This is the overlap profit because this is taxed twice. This is taxed here also. So 3,750. This is the overlap profit. And what about Carol? See, Carrot started commencing on 1st July 22. So he will fall in the tax year 22-23. That's one. For Carol, we'll do a separate. 22-23 and 23-24. Okay. Basis period will be from 1st of July 22 till 5th April 23. 9 months. How many profit? 6,000. So equal to 6,000 into 9 months. This one. And then for 2023-24, year ended will be, it's year ended 30th June 23. 6,000. Can get it from here. So there will be an overlap profit for Carol as well. What is it? This one, 4,500. Usually overlap profits are in the beginning of the period, not in the end, towards the beginning tax years. Because some portion of it is taxed in the first tax year and some in the second tax year. So that's it. Steps for partner leaving. You need to identify the partner who is ceasing to be a member, allocate the profit, remembering that if it's a part away through the period of account, then it will affect your profit sharing ratio for that period of account. And then you need to calculate this in two parts, like how we have done for a partner Rafa who has just added in between the year, and also for Carol who have just started, who was added to the partnership in this starting period, how it affected the calculation. Then for partners continuing, use the normal current year basis. For partner ceasing, you need to use closing year rule basis and deduct overlap profit. Now let's do question. We have two questions, illustration 4 and test understanding 4. This is for ceasing of partner. So we have 4 partner, ball, spare, globe and bauble. Salary is given, capital is given, interest on capital is given, profit share is given. And they prepare accounts to 30th September. Ball decides to resign at the end of March 2023. Existing salary and interest will be there, but balance of profit will be split equally between the remaining 3 partners. Then profit has been given for 30th September 2022 and 30th September 2023 as 180 and 210,000. You need to calculate the trading profit for each partner. And Ball informs you he had 15,000 overlap profit. Why did they give you this information? To tell that a partner has ceased. Test understanding 4. Okay. Continuing the test understanding 3 above with Abel, Berti and Caro. Berti retires on 31st December 2023. And then they give you the profit and profit sharing ratio is given. So calculate Berti's revised trading profit only for Berti. and Abel and Carol's trading income. So let's do that. We will be doing this a little quicker than before because speed also matters a lot. Okay. So here we need for September, the year ended 30th September 2022. Total is given. Just change the name. Ball, spare, globe, and power. Salary 20,000, 18,000, 15,000, and 10,000. 2018, 15, 10. Summary. Okay, so the sum is this one, and interest is 5%. 5% on 100, 80, 40. So it's 5,000, 4,000, 2,000, and 0. 11,000. Total is 180,000. So this is 106. And on this, you will take 35%, 30%, 25%, and 10%. So 35 is 37, 100, 31, 800, 26, 500, 10, 600. 26. Okay. Now, 30th September 2023 year end. So from 1st of October 22 to 31st March, because it is they resign at the end of March 23. How many? 6 months. Even here you have to take 6 months. You have to take 6 months of all this what you have given here. 6 months of 20, 18, and like that. Okay. So it will be half. Basically half. Half of 63 is 31,500. Then 10,000, 9,000, 7,500, 5,000. Then interest on capital is 5,500, 2,500, 2,000 is basically half of interest on capital that you have calculated just here. Half of all this figure. 1,000 and 0. Then 6 months of 10,000 because for year end 30th September 2023 profit is 10,000. So you have to take 6 months only. These names are changed, okay? And 5,000. This is 68. 23,800. 2,400. 17,000 and 6,000. Just take 10%, it will be 6,800, right? Now, from 1st of April 23 to what is the year end? 30th September 23. How many months? 6 months. Remember? Now, Paul has decided to resign. So, Paul will not be there for this period. From 1st of April 23 onwards, Paul will not be there. Okay. That's why his accounts will be 0, 0, 0, 0, 0, 0. Now here, spare. New salaries are given, right? No, they haven't given new salary. For spare, salary is 18,000. It will be divided equally. So here it will be 9,000. Here it will be 7,500 and 5,000. Interest will be 2,000, 1,000, 0. Therefore 3,000. And then this will be 210,000. 210,000 for 6 months. 8,500. This will be divided equally. So it is 26,834. Just we'll keep this as 34. Okay, done. Now, so this is to sum function. Okay. Now, trading profit. So we'll go here. We'll take this 2 out. 22, 23 and 23, 24. This will be 9 because year end is September. Okay. We have for spare, globe and remember for ball, since he's leaving, he will be assessed on the year end basis, closing year basis. They will be assessed on current year basis, spare, globe and bowel. Here, what is his profit? This one, 53,800 for this year. 53,800, 43,500, 2,600. Let's quickly write it here. 53,800, 43,500, 2,600. Then here it is this 69,234, 60 and 43. This three amount. Copy, paste the values. That's it. Okay. Now, what about Paul? Closing year basis. So for him, tax year 22-23. He is not there for 23-24. This is for year end 30th September 22. When is the period end? Period ended 31st March 23. To know all this, you need to know the closing year basis, opening year basis, ongoing year basis. All this I've covered in my previous lecture. Here, you need to go and check the profit. 62,100. This is for this year end. So it will be 62,100. Then here, 36,300. Okay. Then add both and deduct overlap profit of 15,000. They have given you here. You see, this is the overlap profit. To the sum function, enter. You see, this is the trading profit for ball. Now, test your understanding 4. So we'll do the same. Total, Able, Berti, Carol. You just delete this. It is 30th, year end is 30th June 2024. You see, they have given you also for this tax year 2023-24. Profit for the year ended 30th June 2024, 24,000. So keep your touch understanding 3 with you. From there we'll continue. So there, this is year end 30th June 2024. We'll add one more column. 1st of July 23 to 31st December 23. For 6 months. So we have to take 6 months of 24,000, which will be divided equally. So here it will be 12,000. They have not given any salary or anything. This will be divided equally. 4,000, 4,000, 4,000. Then the ratio changed from 1st Jan 24 to 30th June, 6 months. 6 months of 24,000 is 12,000. But this time ratio is 65 is to 35. Berti is not there. So 65% of 12,000 is, for April it will be 7,800, and 35, nothing for Berti, just 0 because he left. And for Carol, 35% of 12,000 is 4,200. Okay. So we have 11,800, 4,000, and 8,200. Now, remember, Abel and Carol will be assessed on current year basis. That is this amount and this amount. But for Berti, tax year 2023-24. From test understanding 3, for year end 30th June 2023, his profit was 6,000 for Berti. Okay, and then from there you have to add this 4,000. Then you deduct overlap profit. Overlap profit was 3,750 from test understanding 3 again. Minus 3,750. The total will be 6,250 for Berti. Limited Liability Partnership, LLP. This is the last section for this lecture. Just one slide and then we are done. This is a special type of partnership where each partner contributes towards partnership losses, debts, and liability. But this is limited by agreement. How much a partner is liable to debt or liability or losses is limited under Limited Liability Partnership, LLP. What is the impact of this on the tax? From the tax point of view, it is generally taxed in the same way as all other partnerships. Normal loss reliefs are available. And note that the rules which may restrict the use of trading losses by the LLP will not be asked. So that's it. Now we'll do the practice objective test questions before we summarize this lecture. So we have 4 questions from practice objective test questions, that is test understanding 5, 6, 7 and 8. Here you have to calculate Fatima's trading income, that is assessed for tax year 2022-23. Okay. Now Desmond and Elijah started trading on 6th April 2022. Profits are shared equally. Fatima joined on 6th Jan 23. Profit ratio changed, 3:2:1. Desmond is 3, Elijah is 2 and Fatima is 1. Profit is 72,000. That is for year ended 5th April 2023. So now to calculate Fatima's trading income, remember you need the table. Without that table you can't do. So when is it? They started trading on 6th April 22. And Fatima joined on 6th Jan, right? So until 5th Jan. So let's quickly do that. So the time period will be 6th April 2022 to 5th Jan 2023. Okay, 9 months. So 72,000 profit will be split 9 months. And it will be split equally. So the total is 54,000. This will be split equally between D and E and F. So D and E, 27,000 and 27,000. Now from 6th of Jan, Fatima joined 2023 up to 5th April 2023. So 72,000 into 3 months. Ratio is 3:2:1. So it's 18,000. So if you take 3:2:1, how are you going to get? 3 plus 2 is 1. 3 plus 2 plus 1 is 6. So 18,000 divided by 6 into 3. Then into 2. Then into 1. Like that. So here it will be 9,000. Here it will be 6,000. And here it will be 3,000. So since it's 3,000, you are only asked for Fatima. So the correct answer is D. Okay. Now, remember, to know all this, when is the tax trading income assessed, you need to be very good in your basis of assessment. That is my lecture 10, sole trader basis of assessment. This could be asked in anything, sole trader, company, partnership, anything. Now, test your understanding 6. Here you need to read. Alan, Bob and Caroline was there in partnership since 1st April 2019, preparing accounts to 31st December each year. On 1st November 22, retired from partnership and profit changed. Which of the following statement is correct? The partnership is due to cease on Alan's retirement and the partners will operate closing year rule to calculate the trading hours for the final tax year. Is it correct? This is wrong. A is clearly wrong. Why? Because remaining partner will not use the closing year rule. It is only for Alan. So it's wrong. B. Final tax year of trading for Alan, Bob and Karen will be 2022-23. This is wrong again. Why? It's only for Alan. Bob and Caroline will have to operate the opening year rules to calculate their trading hours for tax year 2022-23. Is it correct? See, when did they start trading? 1st of April 2019. So opening year rule will not apply in 2022-23. This is again wrong. By default, the correct answer is D, but we'll read it. Alan will operate the closing year rule in order to calculate his trading income for the tax year 2023. Yes, he's leaving its closing year and the correct tax year. So D is the right answer. Okay. Even if Alan retires, remember, partnership will continue because remaining partners are there. Now, test understanding 7. Address share of profit. So, Chloe and Henry, 2 partners, 3:2 sharing ratio, 15,000. After a salary of 15,000 to Henry. Only Henry has the salary. 1st of Jan 2023, profit will be shared equally with no salary. Tax adjusted is 92,000 for year ended 30th June 2023. Now, so let's quickly do this. Okay. So you need the total C and A. So from 1st of July 22 to 31st December. Because they started changing on 1st of Jan 2023. So till 31st December 22, profit ratio share did not change. It was 92,000 into 6 months, which is 46,000. But this 46,000, first you have to take salaries. salaries will be shared first. 15,000. But 15,000 only you can take 6 months. So 7,500. Only for Andrea. Then out of 46,000, remember the balance is profit sharing ratio. 38,500. This 38,500 will be shared these two. 23,100 and 15,400. Then from 1st of Jan 23 to 5th, no, 30th June 23. Again another 6 months. So 46,000. Profit will be shared equally. 23,000, 23,000 with no salary. So what is the correct answer? Andrew's share of profit. What is Andrew's share of profit for year ended 30th June 2023? You have to add this period and you have to add this period. You have to add all this. Isn't it? So it will be 45,900. C is the right answer. Now last question. Bilal's tax adjusted retained profit. So Sakina and Bisma started trading on 1st of June 2022. Profits split equally. Bilal joined on 1st Jan. Profit ratio changed. Partnership made a profit of this. So here from 1st of June to only for Bilal. So Bilal, you don't have to care about Sakina and Bisma. He joined from 1st of Jan. So from 1st of Jan till 31st May. How many months? Only 5 months. So 5 months of profit. What is it? 60,000. Which is, here you don't need that table. 25,000. Okay. So out of this 25,000 ratio, 4:1:1. There is no salary, there is no interest. Divide this by 6 into 1. Which is 4,167. So the right answer is B. Sorry, wait. We have to take it to the correct tax here. I'm sorry. 4,167. Okay. This is Bilal's partnership share. After this, you have to use the actual basis for tax year. 1st of Jan 2023 to 5th April 2023. So 3 months. So 4,167. Okay. Out of the 5 months, you're only taking 3 months into tax. Which will be 2,500. So A is the right answer. So now let's summarize this lecture. Partnership is divided into 4 categories. First, basis of assessment. Current year basis. Current year basis is for the remaining partner who does not exist, who does not exceed and who does not enter. And then you need to allocate the profit and treat individual partner as sole trader. Then profit sharing, changes in profit sharing arrangement. Split the profit according to the profit sharing ratio. If the change happens during the year, you need to apportion the profit to 2 periods and then you allocate by each profit sharing ratio. We have done questions. Then changes in partnership, either partner joining or leaving. For those partner who are joining, opening year rules apply only for new partner. And changes to the profit sharing ratio for other partner. For partners leaving, closing year rule. And changes to the profit sharing ratio for other partners. Finally, limited liability partnership, which will not be asked in depth. But just know there is a term known as limited liability partnership where The debt, losses, and liability of partners are limited by the contract. That's it. And it is taxed as normal partnership. That's it. Thank you for watching, and I shall see you in the next lecture. It's a very interesting lecture and a very important lecture. Why? Because it's on trading losses. How we are going to get relief for the losses, how losses are carried backward, forward. It's a must lecture to watch, because definitely you're going to get a question on trading losses, which will be applicable for your companies as well as individuals. Thank you for watching, and please do watch my previous two lectures, especially the two lectures, capital allowance and sole trader basis of assessment. Thank you, and do not forget to subscribe to my channel and share this channel with your friends. Thank you once again.